You are listening to ChartingWealth.com for Thursday, the 1st of June, 2017. Welcome to the new month. Let's talk about where these charts are. We're going to start, as we always do, on the S&P 500. On the weekly chart, we see that the S&P for the day ending on Wednesday, the last day of May, down just a little bit. The Qs, that's the NASDAQ 100, also down just a little bit. Gold up about 0.5%, and TLT up about 0.25%. Now let's jump right into the weekly chart on the Qs. What do we see going on? Weekly's in a confirmed down move since all the way back on the 31st of March. Went down for about 4 weeks and then headed up, really slid sideways for quite a while, although over the last couple of weeks, the market has been moving up. When we look at that 2-day chart, we see that it rotated over, going up back on the 25th of May. And over the course of the last 2-day candle, it broke through the previous 2-day trend line. Just keep in mind that the market does rotate back over, going down on that 2-day chart. You might want to jump in and follow it down because we still have our confirmed down move on the weekly. Although if there's enough energy in continued up moves to pull the weekly over, we'll let you know so you can prepare for that weekly vertical crossover entry that following Monday. You want to know what we're talking about? Go to our website, chartingwealth.com. Make sure to sign up for our daily newsletter where you'll receive both all of our videos that we do, like the one we're doing today, in addition to all of the information we have to share with you, our How to Read a Stock Chart video, the link to that. The layout that you see on our videos at freestockcharts.com, we'll provide that to you for free, so you don't have to set it up yourself. And you'll also get our trade worksheet, our daily market worksheet, and our weekly market worksheet, the things you need to fill out so that you can supercharge your training and really keep up with the practice trades that you do. So that's where we are on the S&P 500. We are not in a trade on the S&P 500 because our 2-day chart is moving the opposite direction of our weekly. We want both the weekly and the 2-day to move in the same direction, as we see going on our Qs trade, which we entered a Qs trade after the weekly vertical crossover on the week ending the 4th of April. The 28th of April, the week ending then, right before this latest month started. And of course, we have seen rocketing movement upward since then, but for that funky week that ended on Friday, the 19th of May, where we had that big down Wednesday, a little hiccup there, but our 2-day chart rotated back over, going up soon thereafter, and has been continuing to go up ever since. We have 3 connected candles all moving up, actually 4 candles altogether, but 3 connected. So we're still in that continued up move on that Qs chart. Isn't it beautiful when you see those weekly vertical crossovers and things just go in the right beautiful direction? You got to love it. Only thing that continues to concern us as far as the 2-day chart goes is we're still in a negative on that derivative oscillator. So again, be alert, watch that 2-day chart, continue to watch that weekly chart. Back to the weekly, on to bonds, our 20-year bonds. What are they doing? Well, remember, crossover going up on those bonds back on the week ending the 3rd of February. And we continue to see upward movement ever since we had that crossover on the 2-day chart back on, if I recall correctly as we go to it, Friday the 19th. That is correct. Slid sideways for us a couple of 2-day candles, and then for the last 4 days, nice solid up movement and appreciation, just the way we like it. We love following the trends. That is what we do here at chartingwealth.com. That is what we are all about. We are not about forecasting. We are about trend following, my friends. That is the way that you most easily make money, successful trades, when you are doing what we do, and that is charting. Charting wealth is what we are all about. Now, we're not a stock calling service. We're an education firm. I want you to practice with us for as long as it takes for you to learn what we do and get good at it. And like we said before, you supercharge your training if you have our daily market worksheet that you fill out every day. and once a week over the weekend, that weekly market worksheet. And of course, when you do your practice trades, you do the trade worksheet. That is the best way that it works, my friends, if you want to really know what it is we do. Okay, lastly, we're going to look at gold, up 0.40% for the day. On our weekly chart, we saw that crossover all the way back in late January. Gold has continued to trend upward with a few weeks of some down movement along the way, but we're in a confirmed up move on gold on both the 2-day chart and on the weekly chart. As we move into that 2-day chart, we can see that that 2-day crossover just happened on the 2-day candle back on the 26th. This latest candle, latest average pace candle, shows some weakening. If we look at that 4-hour chart, what do we see? We see that 4-hour chart slid sideways over the 30th and then started building up, as we said earlier, up 0.40% on Wednesday, the last day of the month. Remember, that 4-hour chart for us is just prescient. You can use that chart alone to practice your gold trades because it works over and over and over and over and over again. It is your master chart for gold. How long will it work? We don't know. How long will we use it? Till it doesn't work again. The caveat that we give you is that it always seems to stop right at the beginning of the year. And well, it stops at the end of the year and then resumes sometime after the beginning of the year. So again, check out the 4-hour chart for gold. It is continuing to move up. For those of you paying attention to it, do be careful. Derivative oscillator has lost some of its energy. So when it gets ready to move over and go down, if you're on that 4-hour chart, pay close attention. You need to check it twice a day, at noon and then toward the end of the day, because it does represent half-day movements. That's where we are as we come to the end of the month and the end of the day on Wednesday as we go into Thursday, the 1st of June. Hope that you are having a wonderful time. Remember, the summertime trading zone is the most difficult because a lot of the volume is leaving or has left the market, and the market can be more prone to sideways, up and down kind of movements that can make it harder to chart, although not yet for us. We're continuing to see nice appreciation in charts that we can read and we can practice trade on. Thanks so much, my friends. Let us hear from you. You can always email us, cw@chartingwealth.com. Please follow us on Facebook, Twitter, Instagram, YouTube. Subscribe to our YouTube channel. Also subscribe to us on iTunes. Give us a 5-star rating. Say something nice about us. You guys have made us one of the most popular stock trading, stock market sites in the world, and we thank you. Well, actually, iTunes channels, podcast, and we thank you so much for that. Remember, the way you subscribe is at chartingwealth.com. We never sell your information. We don't give it out to anyone. We are here for you. God bless. All the best from the team here at chartingwealth.com.